Good morning. It is an honor and a pleasure to introduce our next speaker, Kevin Worth. Kevin is the CEO of Coindesk. Unless you've been off planet, Coindesk is the publication in the blockchain and cryptocurrency space. And it's something that you could try and resist, balance your life better, get more sleep, but somehow every day you keep refreshing that website to see what's going on in this fast-paced industry of blockchain and crypto. Between news and data, research, conferences, this is kind of a required platform to stay on top of, both for new participants and old. Kevin has had a very distinguished career as a technology media executive. Early days of the internet and the dot-com days, Kevin was founding CEO of The Deal. And there's a lot of parallels between The Deal back in those days to Coindesk today. And after which Kevin subsequently sold that to the street. More recently, Kevin was CFO of Bloomberg's TV and media businesses. And I think this industry is very fortunate to have someone like Kevin at the helm of Coindesk. And I think we're going to see lots of interesting innovations over the near term coming from him and his team. Lastly, I also want to thank Kevin and Coindesk for being media partners of the DC Blockchain Summit. So without further ado, please help me welcome Kevin Worth.
Well, thanks. Thank you, Matt, for that, and Perry-Ann, thanks for having us. So I can skip over the introduction of myself, but thank you for having me today. It's interesting. I've been now in the blockchain sector a little over a year, but as Matt mentioned, in media and information business for over 20 years. It's certainly never been a more exciting time to be in both. So let me talk a little bit about what is the state of blockchain. Admittedly, this presentation was really put together. We've been doing it for 4 years. It's a quarterly research report. If you go to Coindesk.com, you can download the entire 170-page report. I'm really going to try to hit some of the highlights and the themes today. And we really put this report together as an education for a segment of the audience we call the curious. So it is high level, particularly for this audience, but hopefully you'll pick up some nuances as well. As Matt said, let me just 2 minutes on Coindesk. We are the leading digital media events information company for crypto asset and blockchain technology. We average about 10 million users per month, close to 700,000 Twitter followers. If you don't follow us on Twitter, please do. That's at Coindesk. We also put on an major annual event called Consensus. The theme changes each year, listening to a lot of the previous speakers. It's interesting, our overall arching theme for Consensus this year is going live, as opposed to a lot of the projects that are still finding their way. We're really trying to bring to the stage projects and interesting developments for going live, and the previous speaker with the Identity 2020 is fascinating. Consensus will draw probably over 4,000 people, 70 different countries, and we've announced a partnership with the New York Economic Development Corp to really expand it out to Blockchain Week. There'll be a series of events going on May 11th through the 17th, including a job fair for any of the students here. There's going to be a job fair for folks interested in getting into the blockchain industry, and that is free for all. So the agenda for today, I'm going to move quickly through it. I'm sure Perry-Ann can help you get back some time here as well. Okay, so blockchains are growing. This is 600 billion at the end of the year. This morning, about a little under 400 billion. So that's a big drop. But the more important question is why. So we look at a lot of there's not an exact answer, but we looked at a lot of correlating factors, right? So you could overlay this with search terms in Google, pretty much mirror the rise in prices. Searches for Bitcoin, for ICO, for Ethereum, as those search terms go up, so does the price. The other big thing that happened, this is the Q4 time period, again, from the media perspective, really the major media, what I call the mass media, started taking an interest. That ended up being a massive, what I think of as a marketing campaign to bring a whole new set of audience into trying to figure out what is going on here. So that also feeds off the search terms that go in and then therefore drives up the price. And then you have easy on-ramps like Coinbase, which I'm sure most of you recall. At one point, I haven't checked recently, but Coinbase was the #1 app in the App Store, bigger than Facebook, bigger than anything else. So think about that. That's quite an accomplishment. So those three factors tend to drive what is happening. So just some definitions, and I know again most of the folks are this is second nature, but I feel like it's always important to bring this out because not all my colleagues in other media always use these terms correctly, and I think that just adds to the confusion that goes on in the mass public. I can't tell you how many times, and I'm curious from the audience, how many times have you heard people say, "Oh, I like blockchain, but not crypto"? Anyone? Yeah. Perhaps when I hear that statement, I stop and pause. Perhaps they mean they like private blockchains. That's really sort of what they're talking about. Or perhaps they're still thinking through new ideas of what trust can mean. And in that case, I'd actually encourage all of you. There's a new book out by the chairman of our advisory board, Michael Casey, who many of you may know, called The Truth Machine, who really does lay out a whole new way to think about a trustless system and what trust can do. So when you hear that, I'd encourage you as well to pause and to think a little bit more critically about it. Obviously, Bitcoin was the first. And again, just to clarify terms, Bitcoin with a capital B, the Bitcoin blockchain, as the protocol. Bitcoin with a lowercase b, the asset that's native to the public blockchain. But there's a ton of others that have come onto the scene. This chart is showing really the change in market share of Bitcoin to all the other crypto assets, many via ICOs that have launched really since the May timeframe. I do get asked all the time at Coindesk, which ICOs we will cover on our website, and which we will not. And so I will always publicly say there's really two factors that we look at, judgment calls. But the technology has to be materially interesting. It has to be a materially interesting new advance. We see lots of small derivations here or there, or things that are interesting ideas, but perhaps the technology hasn't advanced. Or if the VCs really have an interesting investment theory. Those are really two of the ways that the editors and I will think about that. Portfolios are becoming more diversified. This is a result of a Coindesk sentiment survey we took. The holding of digital assets is broadening. Obviously, the readers of Coindesk are a bit more sophisticated than your average curious new person. What I mean by that, if you look at some of the assets, like you can't go onto Coinbase and buy Cardano at the moment. So you have to do a little bit more work. So this is showing where people are spending their money. So some key takeaways on the public blockchain sector. You will all remember the historic run-up in price. We like to think that perhaps our event on November 28th, Invest, was part of that, but perhaps that's just coincidence. And this was really the story that the mass media was telling. It's sort of what made that massive marketing campaign happen in Q4. I do think, and we certainly hope, that the overall narrative in the story will shift back to the technology. because that's where the really interesting work, as all the speakers who've come before me have started to talk about. And part of that is because there's a really lot of interesting fundamentals going on beneath the big headlines. Block size, transaction value, hash rate, all are interesting metrics to study. And they tell a far more sophisticated story how the technology is being used and the network is being used. So in 2017, really again, May to December, you could say everything was up and to the right. Perhaps some of you have seen this chart as well of traditional assets versus crypto assets. In fairness, when I looked at this chart, it doesn't address sort of the risk return of these various assets. It just gives you the raw percentages. But I do think it has a large conversation going around are digital assets a new asset class? And if you're thinking about that question, I'd encourage any of you to read Chris Brodisky's book, Digital Assets, which talks about it from the retail side. And our Invest event that we do in November really has the conversation for the institutional class as well. This is a result of this chart is a result of a sentiment survey we did for our readers. I thought it was interesting. About 50% said yes, that cryptos aren't a bubble. I guess 50% were sort of no, undecided. And anecdotally, when we talk to the folks that are in the 50% no and undecided, they would actually tell you they think fiat is the one that's in the bubble. Okay, so again, this is we've got a bunch of stats here that really the segments of the audience, the curious, sort of exploded. And I'm sure most of you have had these conversations with, random people, what's going on here. But the Fringe went mainstream and really changed the size of the audience and the folks who are interested. On the investing side, it's been mostly retail-led, but Wall Street is definitely coming. They're poking. There's some, there are lots of major players who are trying to figure out how to participate. And on the technology side, obviously the disruptors, it's a very global audience, and the corporates are obviously investing as well. We have a slide on that in a moment. One of the things we wanted to highlight in this report, there was some mass media, I think, myth out there that we wanted to debunk, that retail investors are not really over leveraging. We saw some stories that the narrative was sort of comparing what's going on to the mortgage bubble. That's not true. People are not leveraging up to buy crypto. Okay, we could spend a lot of time on this slide, but I just a couple of thoughts. Crowdfunding mechanism is really, I think, added to the velocity of innovation in this space. We didn't have that in Internet 1.0 or 2.0. It was a different funding mechanism, and that has led to an increased velocity in technology. One other update on this: if you look at 2018 already through February, we're a little way half of in terms of dollars raised for all of 2017. So February of 18 has already made a little over half of all of 2017. Another beyond ICOs creating value, forks created some value, and I would also say some confusion in the market in last year. Perhaps one of the takeaway here, this is a good area for debate, but that Bitcoin could survive a big political debate, and both protocols, these protocols are alive now, at least for now. But that was certainly a topic that dominated the headlines for a good portion of 2017. So private blockchains. Listen, while most of the media hypes what's going on in the private blockchain because there's an interesting investment story, there is undoubtedly fascinating and important work going on in the enterprise market, the private enterprise market, and that's always been a pillar area of coverage for Coindesk. And as this market grows, and with investment and growth, Actually, there's one thing we've noticed. There's a big mismatch of supply and demand for talent. It's one of the reasons that we're doing the job fair at Consensus this year. Consortiums, they've been the primary drivers of the enterprise growth. But again, we've begun to notice a shift that there are lots of Fortune 100 companies on their own doing interesting projects. Walmart comes to mind. They've made some announcements. Comcast comes to mind. They've made some announcements. And FedEx is another one. In fact, this morning we'll be announcing that Fred Smith, the CEO of FedEx, will be a keynote speaker at Consensus in May to talk about what they're doing in blockchain. So that'll be an interesting talk. Not going to spend some time on here, just given the conference, but there's a lot. But I would just point out that the rules are still being written globally. It's the responsibility of regulators and the industry. I thought Perrianne last night gave a pretty important rallying cry to the industry to step up and be part of this solution. Otherwise, it will be handed to you. So the current state of the blockchain community, this is, I guess, more of a reflection of the readers of Coindesk. I guess a couple of key points. One, very young, relative, male, global. There's an entire generation of investors in crypto assets that are new. I think it speaks to when the Commissioner Giancarlo sort of mentioned that they can't be ignored. That was a thoughtful observation. As part of our sentiment survey, when we asked those folks, did you become a millionaire in 17? Most of them were not the early investors, but I can tell you they are an increasingly optimistic group that will stick with it. So, very good, and that is our current state of blockchain. Thank you.